Hey, welcome to the Profit Builder video series. I'm Vicki Suter, your host, and I'm the author of the book, The Profit Bleed, How Managing Margin Can Save Your Contracting Business. And these videos are all about helping you grow a more sustainably successful contracting business. And for over 25 years, I've been helping contractors increase their profits, generate more time in their day, and reclaim and refine the joy in what they do again. And that's what this video series is all about. And my goal is to help give you the thinking to be able to understand how to do that in your business. And then I actually give you tools and resources that help you implement what it is the video is talking about. So I hope you enjoy today's Profit Builder video. So this time of year is when I work with a lot of my clients on planning for the next year. And I'm recording this in November, and right now we're in the process of doing things like setting goals for the next year, looking at where do people want to work on their business in the next year, and especially we're paying attention to what's your financial plan for your business? Like, what is your profitability goal? And one of the things that I notice is a lot of times we set goals for revenue, but we don't necessarily set goals for net profit or even cash reserves or planning for what's the profitability I want to make in my business. A lot of times when I talk with people about this, I often ask so do you have an operating budget for your business when people first come and work with me? And oftentimes the answer is no. And a lot of times when I dig a little bit deeper, the question that seems to come up is that, well, I don't know how to do it, or that I set goals and then I don't reach them and then I'm disappointed, so why bother? And I have a completely different point of view about doing a budget for your business. And I look at it like it's no different than when you're planning for making a profit on a project. So when you bid a job, you bid it with the intention of making a profit. So you look at how am I going to make a return so that I can cover the costs of running my business, but also so that I can have some profits left over. And what I have found is that when we take that same approach to doing budgeting for our businesses, we can create way more profitability and an intentionality about planning for profits. And so, why is that important? Well, for me, it's way more than just numbers that exist on a piece of paper. I see that doing an operating budget is the most direct path to building the profitability that you want in your business. Now, sometimes people go, so what's the profitability? What is that? Well, it seems like it's kind of obvious, but let's just break it down for a second. So when I talk about profitability of your business, I mean being able to have money to do several different things. One is invest money back into your business and being able to grow your business. Another thing is being able to, maybe it's that you want to be able to have profits so that you can do profit sharing and compensate your employees, or maybe to be able to do generous bonuses. Or maybe it's that you need the money and profits to be able to finance your obligations, your debt, right? Maybe it's that you simply want to make more money that you can put in your bank account and have more cash. Maybe it's investing into your retirement account. Maybe it's that when you reach a certain profitability that you can offer more benefits to your employees, right? There's lots of different things that fuel and drive what we want to do with our profits. And so when you can think about it and think beyond just the revenue, right, which is oftentimes where we stop when we set financial goals for our business, but that we actually set goals for gross profit margin, and we set goals for net profit, and we set goals for cash reserves. And I'm going to walk you through each of these. But when we can be intentional in planning that way, you can start to look at, well, what do I want to create? Right? So always the first step is deciding how I would like it to look. And then looking at, well, where am I now? And how do I build the path to getting from where I am to where I want to be? So what I want to talk with you about today is how do you identify the big goals of your business and first just establish that. And then how do you build an operating budget for your company? And so what I'm going to do is walk you through a goal worksheet that I have that I recommend that people use as a beginning point to start to look at, well, what are my goals for the year? So that when I start to build my budget, I have some goals that I'm working towards. And then what I recommend is that you actually then go build your operating budget. So your company operating budget. So then I'm going to walk you through some elements of what does that look like. So I'm going to share my screen. So what you can see on the screen is a company operating budget goal worksheet. So this is the very first thing that I do with clients is we go through and we look at what are your big goals, and then just start to identify and answer some questions that will help you start to formulate a plan. So when you look at doing budgeting, I look at it like it's not just numbers on a piece of paper. It's an opportunity for you to create a plan for what you want to do in your business in the coming year. So the first thing that I do is we ask the question, what's your revenue goal, right? That's usually a number that everybody has. So you set a revenue goal. So the next number that you want to set is your gross profit margin goal. And contractors live and die by gross profit margin. And I say that because creating a consistent gross profit margin or rate of return on the work that you do is critical to being able to manage a predictive profitability for your business. So I want to just talk about this term margin for a second. So margin by definition it's just a percentage. It means the rate of return on the work that you're doing. So in other words, it is the percentage of return that you get for your revenue less your cost of goods sold. That's your gross profit, and the margin is the percentage. Now, the reason we want to manage to a percentage as opposed to just dollars is that percentages are what I call the great equalizer. They will stay the same no matter what your volume is. So if your volume goes up or your volume goes down, percentages are the great equalizer. In other words, you want that to stay consistent for your business. And depending on what type of business that you have and the size of your business, that gross profit margin could be anywhere from 14% to 40%, right? If you're a subcontractor and you do smaller jobs, it should be closer to 35 to 40%. If you're a large contractor that does multi-million-dollar projects, $5, $6 million, it's probably going to be closer to 14%, right? So it depends on the type of work, the size of work, the type of company that you are is going to vary. And one of the easy ways to be able to see kind of, well, what's my history is to go look back at your last 5 years of financial data, pull that out of your software, and go see what's my average gross profit margin that I have done, and maybe look at if you should be increasing it. And I'm going to talk a little bit more about that as we talk more about this whole thing about doing budgets. So the next number that you want to set a goal for is your net profit margin goal. So this is what's your rate of return on the very bottom line. Now this has some standards that you can use as some goals and some targets for your business. So net profit margin, a company that's run well is 8 to 10%. A company that's run really well is going to be 10 to 12% net profit margin. Now, let me make a few distinctions here because that's after your salary, right? So as a principal, if you're a sole proprietor, that number is going to be much higher. And you want to include, when you look at overhead costs for your business, you want to include a salary for you. So that 10 to 12% goal is after you've paid yourself a salary. Okay, so the next number that you want to set a goal for is cash reserves. So a good rule of thumb in cash reserves is to have 3 to 6 months of overhead expenses in cash reserves. I did not set that goal. That's just kind of a standard in business, that it's a good business practice, that if you want to build a financially healthy business, you put money in reserves, again, equal to 3 to 6 months of overhead. And if you've never done that, if you've never had cash reserves, there's a couple things that will do for you. One is, gives you lots of peace of mind. If something suddenly happens and a project doesn't pay your receivables, you've got money in float. If you've got money to cover that float before you get paid. If you have a sudden gap in billings, there's some catastrophe that happens, work stops, you have something in reserves. There's something that unexpectedly comes up that you have to pay for out of pocket. You have money in reserves. I'll tell you, when the recession of 2008-9 first came underway, that money in reserves saved a number of my clients. So the other thing that you'll find, though, is that two other things. One is you're just going to have more peace of mind about the cash flow in your business, and you'll have less stress about cash. And the second thing it does is that if you go to a bank and you're looking to get a line of credit, the bank is going to look at your financial reports, and they're going to look at certain ratios. And inevitably, people who have a lot, that amount in cash reserves generally have a more financially healthy business that makes you more creditworthy. So those are just a couple of things to keep in mind about cash reserves and some goals that you might want to set about that. Now, the fourth number on here is, what do you personally want to be earning? If you're the business owner, what do you want to be earning in the business, and what do you want to take? And, this is an important number to identify for yourself, because a lot of times, especially if you're a sole proprietor, you look at, well, I get whatever's left over on the bottom line. And this is part of where I invite you to shift your thinking and being purposeful and intentional about planning for the profits that you want, and planning for your financial health for you personally as well as for your business. So choose a number, and then what you want to do is you want to create a plan around, how am I going to get to that number? So what we're doing here is if you're here today, what we're doing is we're saying, well, where do you want to be a year from now? What do you want to have gotten accomplished? So you can start to see that this whole process starts to have you thinking about, where do I want to end up, so that I can start to craft a plan that's going to help me get from where I am now to where I want to be. So then these next questions on here are geared towards helping you understand, well, what's it going to take to run my business, and what are the things that are going to impact the expenses and the costs of my business? What capital investments do I want to make, and so on. So let's go through these questions. Which office employees will get raises next year? So this is important. Or are you going to add staff, right? So that's going to add to your overhead expenses. And we'll talk about how you incorporate this information when you're doing budgeting. And are there any changes in the organizational structure in this next year? So will there be any adding of a new team, or will you be adding any new divisions, right? So if you're a contractor that does construction, but you want to add a service arm, will you be doing that? Because if you're going to add a service division, now that's going to require, I need more trucks, I need more equipment, I need tools, and so on, right? All those things can impact costs. The next one is the organization, number H, organizational structure or legal structure, going to change? So are you adding partners? Are you buying partners out? That could affect your legal costs. It could affect how much you need in cash flow, those kind of things. And then what projects do you have coming up that might require additional expenditures? So that could be things like new software. I'm upgrading my accounting software. I'm adding new technology. We need a new server. We're doing new trainings with the team, and so on. So those are all things that can increase the expenses of your business. And then what equipment, number J, what equipment might you need? So am I going to need to buy a new server? Am I needing to buy new trucks? Do we need to have new tools that we have to buy that are over $1,000? Those are capital expenditures, and I want to plan for them, because that's also part of what I'm planning for in terms of my profits, right? I'm going to look at my profitability and go, am I reinvesting in equipment with that profit? Am I financing it, and so on, right? And then the next question is, are there any new services or products that we would offer? And are there any other changes or plans that will impact the company's costs this year? So this is an opportunity, again, because I'm looking at, well, what do I want to have happen this year? What's my strategy or plan for where I want to go, and where do I want to be at the end of this year? What's our growth plan? And then the next section down here is there any new equipment or assets that will be purchased? So you're going to fill in this information, and I'm going to show you this budget goal sheet that this references in here in a second. But is there any new assets that we're going to purchase? And if so, how much are we going to need in cash? How much are we going to finance? When are we going to need it? And then the next section is, do we have existing debt that we have to pay down? So both of these things are going to start to let you see where are the things that are going to use some of my cash that are going to come out of net profits of the business. Purchasing new assets, even if it's just a down payment on a new asset, and also paying down debt, those monies come out of your net profits. And then the last section on this planning goal worksheet is professional fees, looking at what professional fees am I going to have? You know, if I'm going to have my contracts revamped, my legal fees are going to go up. I know I'm going to have taxes done. That's my CPA. Am I going to bring in a consultant or a coach for my team? Am I going to do any special training programs for my team ongoingly? Like an example of that, I have a number of clients that do sales training, and so they have a sales training consultant on there. My training and coaching comes on there. CPA, legal fees, that kind of stuff. Okay, so those are the things that as you begin to look at planning for the next year, this is always the first step to creating an operating budget for your company, because what it starts to do is, you can see, starts to have you think about what am I going to be doing and what are some goals that I have about where I want to end up at the end of the year. And then when you have all of that, then I recommend that you go build a budget. And when you build a budget, here's a way to be able to do this. So I'm going to first tell you what are the fundamental elements of doing an operating budget, and then I'm going to walk you through the different sections in a little bit more detail. So there's 3 basic sections to your operating budget. One of it is revenue. The next one is cost of goods sold. The next one is your gross, and your revenue minus your cost of goods sold is your gross profit dollars. That's this 2.3 million on here. And then your gross profit margin is your rate of return. And then you have overhead expenses. Overhead expenses are, what does it cost me to run my business? This is things like my office staff, my estimator, my office rent, utilities, marketing, business development, auto expenses, that kind of stuff. So that's the next section of my profit and loss statement. And then there is another section on here. I said there were 3, there's 4. Other income and expenses, things like, you know, debt, partner distributions, which I'll talk about. And then we have total overhead expenses, and then net profit. So let me walk through each of these sections with you. So the next step after you've gotten your goal sheet completed is to actually go in and start to compile an operating budget for your company. Now you can see that what I have on my screen is a budget that has totals for what's my goal for 2020. Again, I'll walk you through each section of this. And then what is 2019? And what's the difference between it. So what I'm doing is I'm building a budget for 2020 here, and I'm going to compare that and put my 2019 projected numbers in here so that I can see where the difference is. Now, I do this because I always say that numbers in and by themselves don't mean anything. They mean something in relationship to something else. So one of the things that this budget is going to have meaning to is the goals that you just set on this goal sheet. So when you set the goals and you put a goal in here, those are the goal numbers that you're working for when you compile the budget. So that's the first place where the numbers come into play. So we set a goal for $6 million in this case for this company, and their revenue last year was $5.4 million, so you're going to go up $1.1 million. And then so revenue is usually pretty easy. Most people get revenue right off the bat. That's an easy number. Now let's talk about that other number that we've been talking about, which is your gross profit margin goal. This is where you're going to set a goal and make sure that you're going for a particular gross profit margin. And you'll notice over here that I have this section that says percentage of revenue. Well, cost of goods sold is directly proportionate to revenue. So if revenue goes up, costs go up. If revenue goes down, costs go down. So when we're identifying what is the cost for cost of goods sold, we're not really looking at fixed dollars. We're looking at it as a percentage of revenue. So I set goals for percentage of revenue for the cost of goods sold based on what the revenue was, the percentage was from the previous year. Now, one of the things that you'll notice is there's a new line item on this for this company that for employee health insurance. So the previous year they had no employee health insurance. In this next year, they're adding employee health insurance. So that's impacting their cost of goods sold. But one of the things that we've talked about is they can't have that cost come out of their profits. So one of the things that we identified is they're going to have to increase their prices for an employee so that they're charging more in their bids to cover that additional increased cost for overhead benefits for health insurance. So when we look at the percentage for health and for employee gross, for materials the previous year, actually, I meant to have this be 17.55% because materials will probably stay the same, but labor is probably going to go down. So we're going to assume that labor is probably 33.5% because we just increased health insurance by 0.50%. Because we're still going for, in the case of this company, the goal is to do a 35% gross profit margin. So we're going to keep to that number, and we know that the cost of labor is going to go down as a percentage of revenue, not in dollars, right? Because you can see in dollars, it's increasing. Of course it is. You're doing 1.1 million more in work. But what we're measuring here is as a percentage of revenue. So we're putting in that number as a percentage of revenue. And then we're looking at this key number down here, which is we're managing to gross profit margin. So again, gross profit margin, as contractors, we live and die by gross profit margin. So making sure that when you're setting goals and when you're estimating work, that you're going for that goal of that much margin. And that's really the way of making a consistent profit in your business. So we've got revenue goal, we got gross profit margin goal. Those were the first two numbers that we identified on our goal sheet. And then the next thing you're going to do is you're going to build your overhead budget. So one of the things that I look at, so overhead expenses are what it costs you to run your business. These are things like rent, utilities, telephone rent. We talked a bit about this a second ago. And here's how I look at this. There's three different ways to do budgeting for these types of expenses. They tend to be, first of all, more fixed in nature, and they tend to require more intentional and purposeful planning and thinking. Otherwise, expenses can kind of go wild. So there's three different ways to look at budgeting for overhead expenses. One is what's called zero-based budgeting. Zero-based budgeting is I am going to figure out what's my cost from zero. Like I'm going to go in and let's say for rent, I'm going to look at what am I paying for rent every month. I've got a lease. It increases in June. So when I take that increase into account, it costs me X number of dollars. That's what I'm going to put in here for my rent. But then I have other expenses that are like, let's say DMV fees, or well, let's use gas. It's not an exact science. I'm probably going to take last year and look at it and go, well, revenue's going up a certain percentage, so I'm going to increase gas expense by a certain percentage as well. So that's using historical information and adding some factor of increase to it. I'd probably do the same thing for utilities. And then there's things like insurance auto, where I'm going to look at what I've spent historically and also look at, it's usually a zero-based budget. I could figure out how much it's going to cost me for insurance. I can figure that dollar amount out. But then there's some combination between purely historical number and zero-based budgeting. And that's where you're going to use the goal worksheet that's going to help you identify some of those things. So that might be things like education and seminars. That's a great example. So what training am I going to do with my team? Where am I going to invest in education with my team this year? When I assess my team and I look at where people could use to improve skills, how much do we want to spend and where do we want to spend it? So that's that intentional, purposeful thinking about it. And I'm not really using, I'm going to use some estimate number, or I'm just going to decide I'm going to spend X amount of money, right? So I don't really have an exact number. I'm not going to use historical information, but I'm going to plan for and think about and be strategic about where do I want to invest my money next year. Marketing is another line item that's just like that. Like, all right, are we going to improve our website? Are we going to get a marketing coach? Are we going to go on do Facebook advertising? Are we going to build out more social media presence, right? Whatever that is, that's just being intentional and thinking about it and purposeful about how you're going to invest the money. So the thing is to think about your overhead expenses like a combination of what can I look at that's zero-based, what can I look at that's based on historical with a little bit of an increase because it's not an exact science, and where are the things that I want to be intentional and purposeful about where I'm going to invest more. And again, I'll say your goal sheet is one of the things that's a tool for helping you having thought through that process. If you're thinking to yourself just about now, by the way, that, wow, this process takes a long time, I actually go through this process and have people work through it over a couple months. We don't do this all at one time, but it's a gradual planning process. Just like you don't sit down in an hour and estimate a multi-million-dollar project. You would never do that. You would think it through and get bids from subs, and you would figure out, go look at those sites and determine what the scope is and look at the plans, right? And collaborate and figure it out. This is the same thing. And this is just as important in terms of planning for the profitability of your business and the financial health of your business. So yes, it takes a little bit. And, the longer you do this, the more successful you will be. And so one of the large items on here that you'll notice is the biggest cost dollar item on here is overhead labor, payroll, general, and administrative expenses. And that is one of the places where you want to do zero-based budgeting. Now, I happen to have this budget template, and I'm not trying to sell this budget template. I'm happy to talk with you about it if you're interested in it. But I actually have a tab on here that literally goes through and looks at what are people going to make, what am I going to have to pay in payroll taxes and workers' comp, what benefits are we going to pay. So it calculates out all of that cost so that it automatically links into this sheet and says, well, this is what it's going to cost me for overhead labor. Given that it's your largest dollar item, and you don't have to do it on this sheet, but just be mindful about it, right? Just do a spreadsheet and figure it out. What's your real cost going to be for your overhead labor, including your non-billable field time, so that when you are planning in this process, you're planning and being intentional about one of the largest line items that you have. So that's building out your overhead expenses. And then you can see that your income from operations, we have $808,000, 12.2%. And then built into this also, in this particular case, is partner distributions. So in this company, part of the officer compensation is also that they get distributions. And part of what I want you to be thinking about is that if you are a corporation or even a sole proprietor, you may not take all of your compensation in a salary, like a W-2 salary, but you take some of it as a distribution. Well, when you're thinking about what does it cost you to run your business, include that number in that plan so that you're accounting for it and still looking at, I'm making a certain goal of 10 to 12% net profit after my total compensation. And that's really how you want to think about it. So we have it built into here as a separate number that up above, there is an officer's salary of $400,000, and then we have an additional compensation for distributions of $30,000. So we have down here then total overhead cost, the total cost of running your business. It includes officer compensation. Total officer compensation is 1.5 million, and that leaves a net profit of 776,000. So that bottom line, if you remember, the goal that we said is that you want this to be minimally 8 to 10%, ideally 10 to 12%. I will say if you're a much larger company who does in the multi-digits of millions, that number may be lower because it's got a much higher dollar volume and you have lower gross profit margins. So I will say if you're 10 million and under, you should be able to turn that kind of a net profit margin in your business and still have your business accommodate a really healthy salary for you. So you can see that I can see this number, 776,000. I'm comparing it to the previous year of 694,000. It was around 12.8%. And my profit's going up by 81,987. So I'm going to talk about this number, this break-even percentage number in a second, but I'm going to go back up here for one moment. And remember I said to you that numbers in and by themselves don't mean anything. They mean something in relationship to something else. So part of the things that we just talked about is that it means something in relationship to the goals I set. So if I set a goal for a certain amount in revenue, a certain amount in gross profit margin, and we talked about 35% in the case of this company, and a 10 to 12% net profit. So I know that I've met those goals. But let's say you go through this and you've asked for everything that you want, and you get down to the bottom line and it says 6%, and you're like, dang. And this happens, by the way. I always recommend to people that when you're building your operating budget, ask for everything that you want, and then go back and look at it and go, all right, well, how are these dollar amounts comparing to the prior year? And am I just spending too much, and where do I want to cut expenses? So if I start up here under advertising and promotion, I'm spending $29,000 more. Now, it could be that I look at this and I go, well, I really want to do that because it's giving me an opportunity to enter into a market and build a momentum that's going to help me even more this year, really build a solid, strong base to be able to for sure hit that 6.6 million and maybe even a base for the following year. Or it could be I look at this and I go, dang, I just don't need to spend that much money. I just threw those numbers in there, right? So this is part of where you're going to start to look at these comparatively this year compared to last year and notice, hey, where, am I spending a lot more money? So one of the things that I say is that numbers always tell a story. So when I look at this, I go, oh, auto insurance is going up. Is that really an accurate number? Or maybe am I miscalculating there? Or maybe I need to go search for new health insurance, right? Or auto insurance. Maybe that's just my rates have gone up way too high. Parking and tolls is up 30%. If that's really the case, I probably made a budgeting error there. So I might change that number and go, that's really crazy. But then one of the things that you'll notice that I have, so you can see where there's like little red dots in the corner. There's notes that I put in here when I'm building a budget that tell me what was my basis for putting this number in here. Because trust me, 3 months from now, 6 months from now, you're going to look back at it and you're going to go, why did I use that number? Notes in here are really helpful for knowing what you were thinking about at the time. So this says increase based on last year plus a percentage increase on revenue for this year. Revenue, let's see. So what's this percentage increase? So when I divide that 9,000 by 19,000, that's a 51% increase. Well, my revenue is not going up by that much, right? If I look at my increase in revenue of 1.1 million divided by 5.4, it's going up 22%. So then I might come back and I might actually adjust this number, and maybe it's, 23,000. Oops. Now that's about a 20% increase, right? So maybe it's even 25,000 using the same percentage increase. That's a little bit high, but If you're in San Francisco, it's quite possible. Right, so those are just some of the things that you're going to look at. Auto repair, increase based on last year plus a percentage increase in revenue. If I did the same thing and I looked at that, I go, well, that went up 12%. That's entirely possible. If I've got a fleet of vehicles and they're being used more, it's impossible if I'm adding more vehicles, right? Bad debt expense maybe goes up a lot because I know that, there's something going on. So again, I'm going to look at this budget versus actual, this change in the years, and just use it as my acid test for knowing, are there numbers that I want to adjust? Are there places where I just didn't take into account enough dollars and cents? So this is a great way to have one of the things I always say about numbers is that when you look at them and you put them down, then you're looking at them from one point of view. But if there's a way that you can look at them from another point of view, it becomes the acid test of, does that make sense? And to some degree, you probably do that when you estimate projects, right? You have some way of looking at it this way, but then also this way to sort of double check what you're doing. Well, this is a way to do that with your operating budget for your company. So there's one more piece I want to talk about on here, which is this line item that says break-even percentage. This is your overhead break-even percentage. So when you have completed your budget, the last thing that you want to look at on here, and I recommend that you look at this number regularly for your business, whether you do an operating budget or not. Your overhead break-even percentage is the number, the amount that you have to mark up your cost of goods sold just to break even, just to come out zero on the bottom line. So as you're planning, if you're planning and you're investing a lot more in your business, one of the things that you want to be mindful of is if you say, well, I'm not going to make 11% on the bottom line, but I'm going to make 4% because I'm investing in my business, can you pass along that cost to your customer? Because if you're not, it's coming directly out of your profits. So knowing what your overhead break-even percentage is really important as a contractor because it directly relates to that whole thing of your gross profit margin. So you need to take your cost of goods sold when you're estimating, right? When you're doing your estimates, you need to mark up enough to cover overhead just to come out at zero on the bottom line, and then mark up again to make a profit. So if you want to make a profit of 12% of 10%, you're marking up at roughly 12.5%. And I will include with this a chart that you can look up for that will help you with identifying what's the markup you have to reach a certain gross profit margin or net profit margin. So I just wanted to point that one piece out in here so that you are also paying attention to that number because it's critical for the gross profit margin of your business. So I'm going to stop sharing my screen. And I just want to recap what we have been talking about today in terms of planning for profits. Right? So if you want to have more profits in your business, to be able to invest back into your business, to be able to maybe do profit sharing, to be able to pay yourself more, to be able to have resources available to build cash reserves, to be able to invest in other ways in the growth of your company, then you need to make a certain amount of gross profit margin. And all we've been talking about today is how do you be intentional and purposeful about making a plan, identifying where you want to go, and then looking at where you are, and then making a plan for getting there by doing an operating budget. So your two ways of doing that are to do a goal sheet first to help you set some goals. And then the second thing is to do an operating budget for your company. And included in this post is a link down below that will let you connect to the budget goal worksheet that I have that will help you in terms of that first piece that we went over. And then if you are interested in my budget goal sheet, email me, let me know. I don't have it on my website, and and we can talk about it. But whether you use my goal sheet or budget goal sheet or not, the purpose is, you know how to use Excel. You do bids all the time in Excel. Just start someplace. Yeah, put down last year's numbers or what you project you're going to end up at this year, and then start building a budget. Start figuring out what's my overhead cost. Look at those numbers. But the point is not it's not about the template, right? It's about planning and being purposeful to be able to have a plan for making the profits that you want in your business. So I hope this has been helpful to you. Make sure to get the download that I've referenced for you. I think that you're going to find it really helps you take this to the next level in your business and allow you to start making greater profits. Till next time. I hope you found this week's video to be helpful. I encourage you to make sure to download the free resource that I offer at the end of the video. I think you'll find it will really help you implement the learning from what has been shared in this video. And my passion in life is helping contractors build more sustainably successful businesses, increase their profitability, reclaim their time, and find more joy in what they do again. So if you found this video helpful, would you just share it with a friend? Thanks. I look forward to seeing you next time on The Profit Builder.